Hello and good morning, everyone. Uh, Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be having an interesting session looking at a weekly overview of the entire market, trying to understand what are the top events in the markets this week with a key focus on the Reserve Bank of New Zealand. So as you can see from my background, I don't have electricity today. So we will be making this session a little bit shorter. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So hello, Lamik Buire, and thank you for joining the session. Let's get started right away. We'll be talking about the economic calendar for this week. So as you can see from the calendar, it's quite a quiet week with a holiday on Thursday. That's the Thanksgiving. So today being Monday, we don't expect much going forward. So from the economic calendar, we don't have any major announcements. So right now we are looking at the trade balance in the Eurozone from 1 p.m. We'll also be looking at housing stats at 4:15 p.m. That's from Canada. Foreign securities purchases from Canada at 4:30 p.m. and of course a speech from FOMC member Goolsbee at 6 p.m. So the G20 meetings will be starting today. So today will be day one, and of course in the G20 meetings we'll have a speech from ECB President Lagarde. So fast forward to Tuesday, monetary policy meeting minutes. This is from the Reserve Bank of Australia. Then we'll get the final core CPI as well as the final CPI for the Eurozone at 1 p.m. on Tuesday. Then we'll get the CPI data from Canada at 4:30 p.m. Fast forward, I don't get my calendar here. It doesn't make sense. So I'm just refreshing it to see what we're expecting. So yes, I have the wrong calendar. So BOJ core CPI is what we'll be expecting on Tuesday in the morning. Then the CB or the Conference Board Consumer Confidence Survey from the US at 6 p.m. on Tuesday. So CPI from Australia, that should be Wednesday very early in the morning at 3:30 a.m. Then the main event of the week will be the official cash rate or the interest rate decision by the Reserve Bank of New Zealand, where in this case we're expecting a 50 basis point rate cut, which means that the rates in New Zealand could drop from 4.75% down to 4.25%. Of course, on the US side, we'll be getting the preliminary GDP data as well as the unemployment claims at 4:30 p.m. and this should be on Wednesday. Then we look at the Fed's favorite inflation gauge or measure of inflation. That's the core PCE price index at 6 p.m. on Wednesday. So fast forward to Thursday, this is when we'll be getting the German preliminary CPI. Reserve Bank of Australia, Governor Bullock will be speaking. Then after that, of course, we know that it will be the Thanksgiving holiday on Thursday. So it's quite a short week. We don't expect much. On top of that, the crude oil inventories will be coming up at 6:30 p.m. on Wednesday. Then Tokyo core CPI on Friday at 2:30 a.m. as we approach the end of the week. So towards the end of the week, we'll be getting the core CPI flash estimate for the Eurozone, then GDP from Canada, and on the weekend, that is on Saturday, we'll be getting the manufacturing PMI. So that's an overview of what we'll be expecting on the week, but what is the main movers of the day? So of course, global stocks rise is the key highlight for the day. So global stock markets gained on Monday after Donald Trump said he would nominate hedge fund manager Scott Bessent as Treasury Secretary, offering a sense of stability to investors. Stocks in Europe opened in the green, and US futures also signaled a positive start to the trading day. While in Asia, Japan's Nikkei 225 index surged to 1.3%. However, markets in Hong Kong and China lagged behind, struggling to gain momentum. So on another news, Turkish business confidence weakens in November. Singapore inflation rate was the lowest since 2021. Gold snaps a 5-day winning streak. We have had a big sell-off after the market opened. Oil retreats after a sharp weekly rise. Of course, last week was very bullish for oil. Dollar falls as Trump nominates Besant for Treasury, and People's Bank of China holds MLF rate steady for the second month. So among the other highlights on the forex markets, we have had a negative performance from crude oil as well as gold, whereas major currencies have made significant gains against the dollar. And if you look at the performance, then you notice that all major currencies are currently on the gains against the dollar, including the euro, the Swiss franc, the pound, the New Zealand dollar, the yen, Australian dollar, and the Canadian dollar, with the dollar being the weakest currency in the markets this morning. So on the performance side, Bitcoin is still continuing the crazy rally against the dollar, being up 131.73% against the dollar, whereas most other major currencies have lost the dollar, with the biggest gain being the yen. So the dollar trading against the yen is up 9.65% year to date, whereas closely following, we have the pound trading against the yen, which is up 8.14%. So I'm trying to highlight these. So these are the results for the performance for year to date. And for today, everything seems to be gaining against the US dollar. So on a summary for the week, we'll be looking at quite a number of things. So Fed's preferred inflation gauge highlights holiday short-term trading week and what to know this week. Of course, we have quite a number of things happening. So among the key highlights, and I'll be going straight to the performance of the SP 500. So according to Yardeni Research, there is a projection that the SP 500 would close at $7,000 per share towards the end of the week. So BMO Capital Markets is looking at 6,700, Morgan Stanley 65, Goldman Sachs 65, and UBS 64. So as of this moment, the SP 500 is just approaching $6,000 per share, which basically implies that we are expecting some form of bull run this week. So on the earnings side, the companies that are set to be reporting earnings this week include Bath and Body Works and Zoom today. That's on Monday. Then on Tuesday, we'll be having a couple of more earnings from Abercrombie and Fitch, Autodesk, Best Buy, Barrington Stores, CrowdStrike, Dell, HP, Coles, Macy's, Manchester United, Urban Outfitters, as well as Workday. So fast forward to Thursday, of course, the market will be closed because of the Thanksgiving holiday, and on Friday, there will be no notable earnings. So outside of that, I don't think we have any other major news. So now we can jump straight into some technical analysis and try to understand where the markets might be headed next. So this is called the MetaTrader 5 trading application. It's the app that we use for trading. So as of this morning, the markets opened with a gap. So you can notice the big gap between the closing price on Friday and the opening price today. And right now, the market is clearly trying to close the gap. And as we all know, whenever you are trading inside a gap, then there's that overall expectation that the market will most likely go for the closing of the gap. So, of course, we expect the Euro USD to be dropping further downwards. So it's the same case for the pound. We are still on course to closing the gap. So the opening price of today versus closing price on Friday is where the gap is, and we expect a continuation of the same. So a pretty easy trade. So for pound yen, we had this pullback playing out last week, and now we are seeing the market finding support. So there's a good chance that the market could be rallying this week as we bounce from the lower trend line. So this is something we had crafted last week. So there goes our trend line, and the market is more likely to bounce from that area and now head right back into the upper trend line. For AUD/USD, we have already just closed the gap. So if you notice, this was the closing price on Friday. The market opened with a gap, closed the gap, and now that the gap is closed, now we expect a bounce from this area back to the day's high. Then for USDN, we have also closed the gap. The market opened the gap downwards, pushed a little bit lower before bouncing, and now it's headed right back towards the upper side. Of course, the closing price was 154.789. So these may as well be the trade of the day as the market looks to recover. So the dollar continues making gains against the yen. So Nikkei 225 index opened with a strong bullish momentum after breaking the upper trend line last week. So looking at the 4-hour chart, this is what it looks like. So if I remove everything we had last week and now we refocus on the chart, then we know that this is our basic support area and this is our resistance area, and the market has just been ranging around this area here. So for now, it seems more likely that the market just bounced from the lower trend line and is now headed towards the upper one. So this is the current cycle. So as for gold, we had a very good recovery. So from the daily time frame, you can see that this was a 5-day winning cycle. So clearly some profit taking is happening here. So with the entire of last week being bullish momentum, now we are seeing the market pulling back downwards. So after the market opened, there was an immediate drop in the price of gold, and we went straight forward for the Friday's low. Now we are seeing quite a bounce as the buyers seek to get back in the markets. But from a smaller time frame, you can already see that this looks more like some form of a consolidation. So clearly not a big directional movement. So if we look at this way, and this is the 5 minutes chart. Now I zoom out, you can see the market is just consolidating, but it seems like buyers are having some more strength. So we expect gold recovery for the rest of the day after a big sell-off early in the morning. So as for oil, we had a very strong bullish momentum happening last week, and now we are seeing some form of pullback. So clearly, if you do a 50 minutes chart, this is what it looks like. And then on the lower side, we also have this. So I'll try and make it as accurate as possible. So now looking at this chart, it's a market that has seen some strong bullish momentum, but since the market opened, all we have been seeing is some form of pullback. So we could be seeing the market playing with Friday's levels. And of course, when you talk about Friday's levels, we're talking about the Friday's low. So we could be seeing a continuation of the drop down to around 73.194 and then bounce from there. So from the 1-hour chart, the chart is still quite bullish. From the 4-hour chart, we are also quite bullish. So we still expect to see the market regaining some momentum from here. So with this Wednesday's crude oil inventories, then we could be seeing some far more upside from Brent oil. So as for equities, we saw a gap, not a gap, a jump as the market opened, then the market stayed level. So clearly, this is some bullish momentum happening at the first hour of trading, and since then the market have just remained sideways. So from the 4-hour chart, this is how it looks like. So last week we had quite some good bullish momentum. So the Trump trade is still on, and we expect to continue seeing a full recovery in the charts. So for the Nasdaq 100 index, after the pullback, we are seeing the market recovering. Of course, the all-time high is just nearby. It's last week's high. So the overall expectation is that the market eventually makes full recovery this week and gets to the previous high. For the Dow Jones, we have a new all-time high as of this morning. So the market made quite good bullish momentum. And of course, notice what was the prior all-time high. So since getting into a new all-time high, we haven't seen much happening in this chart. So it's more of a sideways momentum since the markets opened. So we'll be monitoring this closely to see any signs of a break. So it's the same thing for the Russell 2000. So clearly you can see that this was the previous or the prior all-time high. So the market is headed straight for it. And for the SP 500, there was a big jump higher, but we didn't get into a new all-time high. So there's still more room for upside. And as of this morning, there was a big move earlier in the morning. And then since then, the market has just been moving sideways. So we'll be looking for an eventual break and a momentum to, potentially to the upside as the SP 500 looks to create a new all-time high. So Bitcoin continues the bullish momentum. So last week was not the favorite of the bullish momentum. Yes, we created a new all-time high, but then towards the end of the week, we had the markets pulling back downwards. So the new all-time high is at $99,600 per Bitcoin. So we had the sell-off happening towards the end of the week, but now we are seeing the market opening with a strong bullish momentum. Of course, there was a pullback, and now we are retesting the same price action level. So if you look at the 5 minutes chart, this is a key or a book pattern. So we all know this. It's a triangle kind of formation. Of course, we'll be looking for an eventual break, most likely towards the upper side as the bullish momentum continues this week. So the dollar index has been pretty strong. So the Trump bet continues. So we started with a big drop initially at the open of the markets today, but then the market is recovering, looking to regain the price action level at the close of last week on Friday. So we expect the dollar index to continue moving upwards. So with this kind of expectation, then it makes sense that Euro USD would continue losing to the dollar. Pound USD would continue losing to the dollar, and AUD USD would also continue losing to the dollar. So for the dollar against the Swiss franc, there's still a gap and there's more momentum expected. So after the market opened with a gap downwards, then at some point we expect the market to reclaim the levels that we saw last week on Friday. So in this case, a potential move to 0.89423. So we also have New Zealand USD, which is rapidly closing its gap. So for the Asian pairs, they are more aggressive. So we are seeing the market going for closing the gap. So we are almost there. So just a few pips and we'll be at the the close of the market as of last Friday. So for the rest of the market, if you look at the VIX, we are seeing a drop, which indicates a much lower volatility that is expected in the in the SP 500 this week. So as long as we keep seeing the VIX going down, then it means that we expect less volatility in the SP 500. So as for the silver price action level, I think we have a classic case of what we would describe as a liquidity grab. So this area or level was acting as the support. So the market just dipped, got into the liquidity below the previous lows, and immediately there was a reversal. So of course, for the rest of the day, we should be expecting to see a reversal in price action as the market now looks to reclaim the previous highs in what looks like a ranging market. So this is a market that has been moving sideways for a while. So for the entirety of last week, it's more of a sideways momentum. So now we expect the market to bounce from here and head towards the previous high. So I'm still looking at the comment section and I'm trying to check if there's any questions I may have missed. So Tika19, hello and welcome to the session. Risley, thank you and good morning. Smith Effects, hi and welcome. Zifaral, hi and welcome to the session. Jemima Betty, welcome. David Gethuka, Lucy, Fred, Linton. I can see on Sports TV, Willie Bet. Violeta Siga, thank you for joining. Linton Kibuchi. So thoughts on dollar trading against the Swiss franc. This is something I've just covered in the last couple of minutes. So for this one, there's a gap. We expect the market to be looking forward to closing the gap. Hello, Lewis Mutembei. What is the better to pair with gold, the euro or the dollar? Of course, in this case, we are seeing a much weaker dollar, though the dollar is recovering. So it's much easier to observe euro USD and the outlook for euro USD. So if euro USD is looking to close the gap, meaning that the euro is weaker than the dollar, then if you're buying gold, you should most likely be buying it against the euro. And if you're shorting gold, then you should probably be shorting it against the dollar because the dollar is the stronger currency. Morning, Wagari Patrick. Thank you for joining. So there's this one question here. Is there a possibility that the yen basket might be bullish for the day? Yen basket, dollar yen, don't think so. What we are seeing is the market rapidly closing the gap for the dollar yen. If you look at the pound yen, we're just bouncing from this pattern. So overall, it seems more likely that the yen might be losing for the day. So can we expect gold to continue with the bullish momentum for this week? Of course, yes. We expect some form of recovery after the early morning sell-off. So gold is more than likely, I would say more likely to make a recovery than go into a sell-off. So if you look at the weekly charts, we had this 3-week sell-off and now the market is recovering. So the potential target is the previous all-time high. So we expect the market to continue with this momentum, but now the sell-off offers an opportunity to make entries at even better prices. So there was no major thing leading to the big sell-off on Friday and today. So clearly we expect the market to be recovering here. So of course, after the sell-off, you can already see that the long tails towards the lower side indicate that the market is rejecting much lower prices. So let's see if there's a question I missed. Hello, Emily Victor. For the 50 basis point cut on New Zealand dollar, we expect the currency to weaken as we approach the news. How volatile is the currency? So clearly, what we should be expecting for the 50 basis point rate cut, and this is a really good question. It's a theme that we have been seeing in the markets so far. So for a 50 basis point cut, whenever you hear of rate cuts, also the currency tends to weaken further. So from the daily chart, you can see that the New Zealand dollar has been losing to the US dollar and it's currently testing the previous lows. So the next available support area is all the way down at around 0.577, I would say 57736. So we expect the bearish momentum to continue. So, of course, the markets have not been reacting at the rate decision. The markets have been reacting a week earlier. So in this case, the overall expectation is that the market continues going downwards. So in this case, expect the New Zealand dollar to continue weakening for the better part of the week before the announcement of the rate cut. So of course, we expect that to be playing out ahead of the rate decision. So hello, Gideon Dongo, and thank you for joining. I appreciate you all for joining this session. So as we approach the end, I would like to remind everyone that we have a new episode of the Bullish Banter coming up. So make sure to check it out. And of course, if you're just beginning your trading journey, check out the Novice to Pro series available on the YouTube channel. That is FX Pesa YouTube channel. So if you're looking to begin your trading journey, make sure to register in the links in the description below. And if you're watching this on X, remember to like and share the video and visit the FX Pesa channel to register for a trading account. So thank you, everyone. Thank you for your time. I hope to see you on the next session, which will be happening tomorrow at exactly 11 a.m.